In this video, I want to break down my higher time frame strategy, and this is based off the 1 hour time frame. Okay, so starting things off, step 1 is our higher time frame direction, our directional bias. We can simply use a 200 moving average, which can be applied to your chart. This 200 moving average gives you an indication of the higher time frame direction. For example, you can see the 200 moving average is sloping to the downside. This indicates bearish momentum on the higher time frame, and therefore we should only be looking for shorts on the 1 hour time frame. Okay, and then I just want to rewind this back so I can show you guys how we can look for this 3-step process in order to execute with our higher time frame bias. So if we zoom in a bit here and rewind this back, what we can see is number 2, which is our distribution. Okay, we want to see institutions accumulating orders and really giving this market some juice in order for a strong push to the downside. Okay, and clearly you can see, based on basic market structure, that price is simply just ranging between these two values. So between 0.66700 down to around 0.66400. So this is our range, and this is where the institutions are accumulating their sell orders. Okay, so now that we've identified our distribution phase, we then want to identify the shift from the distribution. And what I mean by that is we want to see a strong break to the downside out of the distribution range. Then we are interested and we can start to look and zoom in for a pinpoint entry. So this is our range here, guys. And you can see that price impulsively breaks down below our range. So this is our confirmation that price and the institutions are more than likely looking to send this market lower. So we have our higher time frame directional bias. We now have our shift. Number 2, our shift from our distribution. And number 3 is simply our entry from our POI, which in layman terms means point of interest. Okay, and our point of interest is where the smart money concepts come in, because we mark this on as the last up candle before the strong move to the downside. We can then go ahead, mark on our guarded high. We do not want price. Let's just get rid of our range here just for simplicity. So this is our guarded high, our invalidation level, and this is essentially the range low that we've broke strongly to the downside. So we can mark that on as a BOS to the downside. So we broke structure to the downside. In terms of targets, we're going to be looking at targeting down 2 equal lows. We can mark this on as a $sign, and this is our equal lows. This is our liquidity area, and all of the liquidity that ultimately lies below here, we're going to be looking at targeting. But that's more of like a higher time frame, a more of a longer bias trade. This is where we're going to hold the runners down to around to equal lows. Okay, so let's zoom in. In terms of number 3, our entry based on our POI, we can set a pending order at this order block here, the last up candle. Stop loss can go above the guarded high. If you want to be safe, you can just pop it above them wicks to the left if you want some more coverage. And then target is going to be down to the low, which is around a 3-to-1 risk to reward. So I would say a conservative stop loss is just above the high here. A very conservative stop loss would be above them wicks here to the left, just to cover, have a bit more coverage on the trade there. So let's play this out. You can see price is messing around a little bit, and then ultimately comes back into our POI. We're triggered in the trade right here, and then we're looking at, we're triggered in right here, and then we're looking at riding this trade down to equal lows. So you can see as of right now, so this is a live trade that's running. Price is around, let's check this, around a 2.5 risk to reward. So I'm going to be looking at taking most of this off at equal lows. If not shortly, I will be securing some partials. If you had a conservative stop loss, you know, price is already around a 1 to 3.6. So you guys would be scaling out of positions here and then allowing runners to run down to these liquidity targets below the lows here. Okay, so this is the higher time frame strategy here. It's 3 steps. Number 1, higher time frame direction. We use the moving average, 200 moving average. Number 2, shift from a distribution phase, which is this here. We've got a clear distribution and a range here. We've had a strong shift, and then entry is based on our extreme supply, which is our order block, which is the last up candle before this strong move to the downside here. Okay, so that's the 3-step process on my higher time frame directional bias, and it really ensures that you guys are sticking to the higher time frame trends and really does increase your probability of success. Okay, so if you did like this video, please like, comment and subscribe, and I will see you guys in the next video. Okay, take care guys, bye bye.